Hello guys, welcome back. Today, we're going to finish up with the ratio analysis. And the last types of ratios are market-related ratios. Now, these ratios are linked with market price. These ratios are linked with dividends which company pays. Now, in order to understand the following ratios like prices earning ratio, dividend yield ratio, price to cash ratio, we need to understand two types of ratio first. First is book value and what is market value. Now, book value is value of the company as per your books of account, that is as per your balance sheet. And the formula is very simple. Equity plus retained earning. What is retained earning? The profit which we have not given to the owner of the company. The profit which is retained by the company is retained earning. So equity plus retained earning divided by number of shares. Let's try calculating this. So if you go to balance sheet for 2020, equity shares plus retained earning, I will put that in bracket, divided by number of outstanding shares. Number of shares outstanding are 10. And the book value of company is 50.75. What does this mean? This means that as per balance sheet, each shareholder should get 50 rupees as the share price. This is as per balance sheet. Now, what is market value? Market value is current share price of the company. If the company is trading in the secondary market. In India, we have NSE, BSE. In USA, they have NASDAQ, S&P, and so on and so forth. So market price is the current share price of a company, which is, in this case, is 150. So book value and market value. Now, first we will calculate earning per share. How much each shareholder is earning every year or in the last year. We will be looking for just last year. So, earning per share, the formula is very simple. The formula says net profit. So, my net profit is 17.5 minus preference dividend. How much is the preference dividend? If, look, there are no preference shares, so there will be no preference dividend. So, preference dividend will be 0 divided by number of shares, and number of shares we know are 10, number of outstanding shares. Earning per share, which we have already calculated here, is 1.7. That means how much per shareholder is earning. So, per shareholder every year or last year has earned 1.75 rupees. Now, price earning ratio is nothing but market price upon earning per share, which came out to be 85 rupees. Now, please understand, price earning ratio tells us that for 1 rupee of earning, how much market price am I paying? So I am paying 85 rupees for 1 rupee of earning. Now, industry to industry, this changes, but this tells us whether the company is overvalued or undervalued. And this is a clear-cut indication. Now, P ratio is very important because it again, I'm repeating it again, sorry. It tells you for 1 rupee of earning, how much price you are paying per that share. Now, the Adani Group shares, Adani Enterprises was trading at 230, P of 230. So, if you see price earning ratio, generally it tends between 30, 40, max 60. But then there are some companies whose price earning ratio skyrocketed. I do not want to speak of every other company, but yeah, price earning ratio is definitely help you to decide whether it is a growth company or value company. Then dividend payout ratio. These are two formulas. I have not. This is formula number 1, and this is formula number 2. Now, dividend payout ratio tells us that out of your total earning, how much you have paid as dividends. Now, look, I have paid dividend of rupees 10 out of total earning of 17. So, my dividend payout ratio, let's do it in percentage, comes out to be 57. So, dividend payout ratio tells me out of my total earning, how much I have paid as dividend. So, remaining amount will be your retainer. Dividend is money given to the owners of the company. That is dividend. Then, dividend yield ratio. Yes. It speaks about dividend per share. So, do we have dividend per share here? No, we do not have dividend per share. We will calculate it, don't worry. So, dividend per share is total dividend divided by number of shares. This is dividend per share. So, I will just put it in brackets, dividend per share divided by market price per share. And what is market price per share? Is 150. Convert it into percentage, and that is your dividend yield. Now, dividend yield tells me how much return you are going to get as dividend when you compare it with market price. So, if you invest 100 rupees as a market price, then you will get 0.67% as dividend. So, as compared to your market price, how much dividend you are going to get? Now, there are high dividend companies which even give dividend yield of 10%. What does that mean? That every year, if your market price is 100, you get 10 rupees as dividend. And that is your dividend yield ratio. It is very powerful ratio for those who want a recurring income, basically retirement, retired employees and all that, they invest in high dividend yield. Now, there are some mutual fund also, which they have started investing in high dividend yield company. Then price to book value. How much is the market value of company as compared to the book value of the company? So market price is 3 times of the book value of the company. So that is price to book value. How much is the market price as compared to the book value of the company? The last one is price to cash flow ratio. Now, I do not have cash flow ratios right now. Cash flows ratios, you will get it from cash flow statement. Operating cash flows generally we take. But the ratio speaks about market price of the company, which is 150, divided by the cash from operations. So let's say 30 rupees is the cash from operations. So price to cash flow ratio is 5. What does that mean? I am paying 5 times the cash which I have received from operations as a market price. So these are always in times. This is also always in times. This is in percentage because it's an yield. This is in percentage This is again in times. Earning per share. This is in rupees or currencies. Market price. This is again in rupees. This is also in rupees. That's it. These are market related ratio. If you have any query, please ask me in comments. And if you like this video, you know what to do. Thank you very much. I hope you enjoyed this.